for that, Veronica. Okay. It's all right. Okay, so today's about effective finance management in two parts. The first part, David's going to give I guess a talk and a presentation to give us the latest up-to-date information on the COVID stimulus, things that we should be doing that maybe we make sure if we haven't done. We're going to talk, he's going to mention about the monthly reporting and also end of financial year requirements for COVID, if there are any. He's then going to go on and talk about what happens when the stimulus ends, because we need to be starting to think about that. And then also look at the 2021 financial year and things we need to be talking about then. And then the second part of the session will be a Q&A, where we're going to talk about cash flow, paying yourself and investing to grow. So, David, over to you.
Fantastic. Thanks, Glenda.
And David's got some screen. He's going to share his screen with some slides. Sorry, couldn't think.
I'm hoping this works.
Yep. Looks good to me.
All good? Okay.
Yes.
I've just got it in this format rather than full screen, simply because I'm just having some trouble with dual screens getting it to work. Thanks for inviting me to speak again. It's really good to see business owners interested in business issues and taking your head out of where we are and getting involved in actually getting what I call good advice. So hopefully I can impart a little bit of knowledge today. I'm just mindful of the time, so I'll just keep that next to me. Okay, effective finance management. I've called this part one, Glenda, because of the rest of the stuff you guys want to cover. And we're going to have a bit of Q&A at the end, so that'll be a good chance to grill me a little bit. And if we don't know the answers, we can always come back with answers after the fact. So let me move through here. All right, so the key things that we're going to cover, just to reiterate a little bit of what Glenda just spoke about, latest on stimulus, monthly declarations. I'm going to talk a bit about end of financial year requirements, and also spend a little bit of time to talk to you about what's going to happen when the stimulus ends. I've got some thoughts on that. And it's good that we've got people like Barbara on board, because Barbara's what I'd call the bubbly positive one, and she'll balance my morbid negativity, and it'll balance out to be a nice even mix. So then we'll talk a little bit about tax time stuff, which then branches into tax planning, and then we'll talk about some Q&A. So a little bit of stuff to cover. It is Friday morning, so I'll try and keep it easy to understand, and that's kind of our style. For those who are on this call who weren't on the last, I've had a business in Port Macquarie for around about 19 years, Direction Accounting. That's gone through a couple of different phases. We're again in growth mode now. So whilst we've been here for 19 years, we're still very much in the market for new business. I say that because about 5 years ago, I brought out Super Coach, which is our business coaching arm, out from underneath the accounting practice, to get business advisory really at the forefront of what we do. It always has been the case for 19 years. It's become a bit of a flavour of the month of the accounting industry to do it, as has cloud. Both of those things we've been at the forefront when they first started. I'm actually looking for something new now to get my teeth into, because we like to be at that front end. So the first thing I wanted to cover is just some words of wisdom. We're talking tax, we're talking financial management. Kerry Packer, we've probably all seen the clip where he stuck it to the government a little bit and said, of course, I'm minimising my tax. If anybody in the country doesn't minimise their tax, they want their heads read. Because as a government, you're not spending it that well that we should all be donating extra. So I've had some really interesting conversations with some business owners over the COVID period. And one of the common things that keeps coming up is that people say to me, but I don't want to be greedy. And I had a real interesting call with a client who yesterday I received a letter from another accountant taking on their work. A very small client, and a client that for the last 10 years has been one of those clients that wants to do everything slightly dodgy, wants to rort the tax system to save maybe $500. And when we turned around and told them that we could get them eligible for JobKeeper, and that would be $18,000, they then turned to us and said, no, we're not going to do that. So we've got these really interesting positions come up, and it's a real thing about the human mind, I think, is that when something's easily accessible, they're not wanting to take it. But when something's actually there to maybe rot the system, they want to push the envelope. And what we try to do is we try to help businesses minimize their tax legally, because it's not something that is dodging the system. You're just using the rules that are there in your favor. And that's smart, effective financial management, or one part of, because you need to take advantage of the things that you are legally eligible for. If you're not eligible for it, I'll tell you, and you need to make changes or do whatever. Again, I had a client this week who had given us information to do their tax, and they had, let's say, $40,000 worth of income and $35,000 worth of cost of goods sold, which means that over the course of the year, they were saying that they'd made $5,000 to then pay all of the other expenses in their business and live. And my comment to them was, well, okay, let's just compare that to what I call the BS test. And that's saying, well, okay, if I don't believe you and I'm on your side and you don't believe it yourself, then the tax man is never going to believe you. So we apply common sense to things, and we say, well, okay, go away. We know we weren't born yesterday. We kind of know what you're doing with your figures. Go away and have a bit of a think about what you're doing. Because even if you weren't doing that with your figures, in this case, wouldn't have had any tax to pay anyway. So it's kind of just fooling themselves. I'm not saying anybody in the group would do that, but it's certainly this issue of you want to minimize your tax, you want to get good financial management in your business, but at the same time, you need to make sure that you cover your backside. And we'll talk a little bit about that a little bit later. You don't need to rort the system to get a good tax result. Which brings me to a slide that I had in my last presentation. I've just changed it a little bit, and that's the good advice is crucial. We've been away from the pubs, we've been away from the bars, but there's never any shortage of people either over the fence or at the bar who are going to give you tax advice and business advice the way that they see it and the way that they feel it should be done. But everybody's got individual circumstances, everybody's different. We have a system which is a self-assessment system. And that self-assessment system means that you can claim whatever you want, and it's not until you get a knock on the door that it's going to come back and bite you. So in many cases, there's substantial issues there that need to be managed, and legislation for tax is complex, even for simple little things. And we'll go into one of the simple little ones a little bit later, but just simple issues of home office deductions can be so complex. if you don't get it right. So little bit of a plug to get good advice. So let's move on to some of the meat of this presentation. There's really, we're in an interesting sort of moment with the stimulus, is that we've certainly as advisors, we've been very thankful that no massive changes have happened on a Sunday night again. For a number of weeks, ScoMo's on the, Prime Minister Morrison is on the TV telling us of some other drastic change that moved the dial monumentally for business or us as advisors. And it's been a real relief to not have that. We've just been able to get on with our work, and business has been able to get on with what they're doing. Now we're seeing those announcements in terms of the restrictions are following a similar thing. You know, 1 minute something opens and gyms aren't opening, and then 3 days later that gyms have got a date, and then 3 days later something else. So we're now in that move of transition of restrictions. But as far as stimulus is concerned, some of the things, they're probably more updates than latest releases that I wanted to cover. And the first of those was ATO delays on cash boost payments. So cash boost payments were those payments for businesses that have employees, and the pay-as-you-go withholding. And what we've found is even though they were done on the March BAS, we've found that businesses have been delayed in getting that from the ATO. It should have been an automatic allocation, but there've been delays. Delays not only from the ATO end, but also because businesses didn't have, they're typically payable on their BAS, so they didn't have their bank account details in their file. So there's a number of those little tricks and tips. The ATO are working on either a 14 or a 21-day turnaround period on these sorts of things. So even if your advisor rings them, they're not going to get any joy about escalating anything, because the ATO simply just roll over and say, oh, look, it's only been 7 days, or it's only been 10 days. They've now passed those periods, and we've still got people who are waiting on money. Now, I understand that the ATO is under the pump, but as business owners, if you are still waiting, it's a patience game. It really is, to wait for that money come through. Similarly, for New South Wales government grants, particularly the COVID grant, not so much the bushfire one, had a situation yesterday where a client that we applied for a New South Wales COVID grant probably about 4 weeks ago, still hadn't come through, still hadn't heard anything about the application, and had an email come through from them just randomly yesterday saying, we require your tax agent number and confirmation that this person actually owns the business. Now, none of that was actually on the original application, but because people have been rorting the system a little bit and getting accountant's letters off somebody who says that they're an accountant and they're actually not, we all get bundled into the same system. So any accountant letter that's on official letterhead with all of your details, they still then want authorization from the client that you're their accountant, your tax agent number, etc. Now, these are things that have just been introduced in the last week. And this has been sitting there for 4 weeks. And this is $10,000 for a business that's struggling. So some of these delays are just beyond the control. So if your accountant is saying these things have been delayed, he is telling the truth, he or she. We are running into these delays, and we've just got to be patient and work through them as we go. Likewise, if you haven't received your grant or your cash boost, it's worth checking in with your advisor and saying, hey, I haven't received the money, because cash boost, we can check. JobKeeper and New South Wales grants, there is no system for us to be able to check whether it's actually successfully hit your account. So unless we actually ask you, or you're on a cloud system that we manage, that we can jump into the bank account and have a look, we don't know. So we're oblivious to whether you've got your money or not. I spoke a little bit about non-claimants. So this is happening a lot. People who aren't claiming what they're entitled to. So they're either not wanting to be greedy, or they've assumed that they weren't eligible and aren't going to bother. I had a client during the week, sole trader, say to me, they were one of the last people that we got onto JobKeeper in our client base, typically do everything themselves. We'd sent them communication to say, hey, get in touch. They hadn't done so. I rang them just to check in because I thought they're probably eligible. They were in an industry that was significantly affected. Their first comment to me was, oh, we didn't think we'd be eligible. We're not eligible because we don't have any employees. Now, they would have missed out on $18,000 over the 6 months by registering the actual owner of the business. The second comment was, oh, I think we're only down about 10%. They're actually down 35%. So these little things are just making the assumption, and it's not too late. So I'll cover that in a second. So there's some myths around claiming, and I class this as latest news because it's just the way things have developed for business owners. So one of the myths that's going around, even with people that we've communicated several times about this with, I think everybody's heads are just in so many different places that sometimes they need to just keep hearing the same message, even if we're tired of saying it. And that's that you only have to pass the eligibility test once. Once you've passed the eligibility test once, you then, if your business increases, that's fine, based on current rules. I've got something a little bit later to talk about there. So don't assume that just because your business is increasing, you might have qualified in April. Now, April's now too late. We've kind of got to keep moving now. But certainly for May, that was the case. We had to get people enrolled. That ship has now sailed. So now we're on to looking at June. So people are missing out because they've got their head in the sand, not getting good advice and believing the myths. The other is that they'll only be eligible in a later month. So they think, oh, well, we're not eligible because we weren't eligible in April, May. So if you become eligible based on current rules, if you become eligible in August, then you can apply in August, using August as your test month. So you need to be keeping an eye on your figures between now and September every month, and doing this test and applying the alternate test every single month, because you may become eligible and you won't get the 18, but you might get 6 or 9. So need to be very mindful of that. The being too greedy, we've done to death. And the last one is people holding off paying their staff. In the month of April, you were able to hold off, and they gave a concession as long as you'd paid your staff by an early May date, then it was all going to be okay. What some businesses have taken is that, oh, well, we'll hold off paying the staff until we get the money. And they're still doing that now. We're in June. You can't do that anymore. You've got to be able to show that you've actually paid the wages prior to claiming the JobKeeper. So there are a few of the myths that are in there. Few of the new things that have been announced very recently, and they are stimulus. They may not apply directly to anybody in the group. I'm not sure if we've got anybody who's in trades or building, but home builders, or the home builder stimulus. So you can tell that the Prime Minister used to be in marketing because everything's got a snazzy little name. We've got job seeker, job keeper, job maker, home builder. I think in a previous life he must have worked for Direction Accounting, Direction Money, Direction Business Broking, and Operation Bean Counter and all that. Maybe on channeling Scott Morrison. But Home Builder has been announced, and Home Builder is going to provide a $25,000 stimulus to individuals who are either building a new home or renovating. And there's some restrictions in and around those, which I won't go through now. It is very new. There are going to be some hairs on this. I was talking to a builder yesterday, and you have to have started building within 3 months of contracting. And the builder's comment to me was, we can't even get DAs out of council within 3 months. So there is going to be the need to analyse this and say, well, okay, how are the rules working? And I think it's going to be one of those things, a bit like JobKeeper, that develops over time. One of the things I've done while I've been in isolation is learn how to cook sourdough. And this might be a bit like sourdough. You just got to be patient and wait and give it time. Yeah. So why I threw that in, I don't know, but it shows I'm human, not just an accountant. JobKeeper changes. So Morrison's offsider, Frydenberg, has come out, and Josh has said July 23, we're going to have a review of the JobKeeper system, and we might tweak a few things. This is after the Prime Minister came out and said, oh, no, look, I don't think we're going to need to change anything because people are struggling. So we've got different language coming out from different people in the government. July 23 is when the review comes out, and it's expected that there'll be some changes made to JobKeeper around then. So I was talking about doing things based on the current rules, and on the current rules, the no longer pass tests. So if you are eligible once, then you're going to be eligible for the whole 6 months, may come into question. They may say if your turnover has increased to a certain level, then you won't be eligible. That's one possibility. Another possibility is for anybody who is getting a top up to the 750, they may say, well, rather than it being a cap of 750 minimum, they may say, if you receive $600 a week, then we'll only give you JobKeeper of $600 a week. If you, rather than having to top people who, it's always been a bit of a weird situation, is if somebody's only working for $600 for you, then the employer has to give them $750 and then get it back from the government in arrears. And the person who's only working the hours of a $600 worker is ahead of the game. So there's going to be some limitations on there, and there may be some limitations in and around people's individual incomes as well, as to whether what they're receiving as JobKeeper. So some things may change, and there's always been an area in the legislation which says we can change this at any time. So we can only work with what we've got in front of us. It's just like any tax legislation. And at the moment, the rules are, if you qualify once, you qualify for the 6 months, and that's what we're working with. So as business owners, you've got to have a couple of things in mind. You've got to work with your cash flow plan, assuming that you're going to have JobKeeper coming through all the way through for your employees, whether they're over 750 or under. But then at the same time, you've got to be pretty quick to change that cash flow plan if the government changes their situation. So we're in this real state of flux as to what's going to happen. There's very little certainty in what might happen with cash flow. Monthly reporting, and this ties in with these July 23 changes. So monthly reporting is there to do two things. It's there to tell the government who is going to be claiming JobKeeper, And it's also there to disclose to the government your this month or previous month's turnover and the next month's turnover. So the declarations that we're doing at the moment are to do with May wages, so or May eligible business participants. We're giving detail of what happened in May, and we're also telling the tax office what our actual turnover was for May, and then telling the tax office what we expect our turnover to be in June. Now, the tax office and the government have come out and said, well, that's only broad disclosure. We don't need to have massive accuracy, and it doesn't have any bearing on your eligibility. And if you've been around for 20 odd years in the industry dealing with the tax office, you kind of go, yeah. It's only going to be put in the cupboard just for information's sake. 23rd of July, it wouldn't surprise that the government turns around and says, well, okay, if your forecast turnover goes over a certain level, or if your actual turnover has exceeded a certain percentage, then you will no longer be eligible for JobKeeper. So that could come. I haven't got a crystal ball, but it could come. Yeah. So your monthly reporting is very important. You can't, another myth of JobKeeper, you can't just, once you apply and enroll, you don't just then sit back and the government gives you money every month. You have to actually report to the government, give them that information, confirm and identify your eligible employees, eligible business participant, and then away you go. And then you will get your money. So there's a claim every month. So don't forget, if you're doing this yourself, to jump into your business portal and go to your current monthly declaration and fill it in. And now's a good time to do it. Otherwise, you won't be getting your JobKeeper money. It's not a hard process, but you do need to do it. On the back of that, if you're having to give them actual revenue for the month, then you need to have your figures up to date. So for those of you who are on cloud-based systems like Xero, then that's going to be easy. You'll be able to just get your reconciliation up to date for your income at least, and then be able to run a simple report in Xero to be able to give your turnover figure. For those who aren't on a cloud-based system, do we have a bookkeeper in the group?
Not today, not logged in today. No.
Okay, all right. So for those who aren't on a cloud-based system, by all means, get in touch with your bookkeeper member. Failing that, we've been Xero partners for almost 10 years now. And I remember sitting in a Xero meeting with 3 people in it. Xero came to Port Macquarie and there were 3 people attended. Now everyone's got a gold star badge on their window saying that they're Xero experts. So take that for what it is. We've got 10 years experience in running it and know our way around it just a bit. There's some good deals on as well at the moment with Xero going through a partner. So if anybody's not on it and wants to have a chat, feel free to grab me. End of financial year requirements and frequently asked questions. So there's a few things been thrown into the mix of end of financial year and things that people are wondering about as they're processing their accounts or whatever they're doing. The first of those is JobKeeper assessable income to my business or myself individually as a sole trader? And the answer to that question is yes. So JobKeeper is a income supplement, if you like. Sure, it's to cover wages, but it's classed as assessable income. Now, if you are a sole trader, that's assessable income to you individually. If you run through a partnership, it's assessable income to the partnership, even though only one of the partners is putting it down as the eligible business participant. It's assessable income to the partnership. If you run a company, it's assessable income to the company, and similarly for a trust. Now, what you do with it once it's in there as assessable income, there are various things you can do for tax to get it out to other people, but that gets a little bit beyond today's session. is the cash flow boost assessable income? So the cash flow boost is the credit against your pay-as-you-go withholding. And the answer to that one is no. So that is simply a credit that the government is giving you based on the level of your pay-as-you-go withholding. So if you are in receipt of cash flow boost, that will go into your accounting system. There's no GST on it. However, it is non-assessable income. So when you are looking at your figures for tax, you add, if you've brought it into your figures in an income section, it's non-assessable, non-taxable. So you'll add that back and make sure that you don't pay tax on that. That moves us through to New South Wales grants. Are they assessable income? Now, this is a little bit of a confusing one. The first one is the bushfire grant. So the bushfire grant is not assessable income. The ATO have come out and said that if a grant is given in regards to a natural disaster, that grant will be non-assessable. So normally grants are assessable income. If you receive a grant, it's assessable, and then what you spend the grant on is deductible. That's typically the way it's been dealt with for years. But with all of these grants being given for natural disasters, the government sort of turned around and said, well, hang on, it's not really fair for us to give you money and then tax you on it. So the bushfire grant, clearly they've come out and stated it under natural disaster that it's not taxable. However, there is no guidance at the moment, no official guidance at the moment that says that the COVID support grant from Service New South Wales is not taxable. Now, there is, what would you call it? There's hearsay where people have called Service New South Wales and got a call centre operator who said, no, that's not taxable, or then rung back and got a call centre operator, a different one, and who said, yeah, that's taxable. So you get similar from the ATO because they're under the pump. A lot of the people they've got on the front line on the phones aren't familiar, and they're giving advice that in some cases just isn't true. So be careful with this one. I'm happy to shoot an update out to members if official guidance does come through. But at the moment, we're advising people that yes, the COVID grant will assume that it will be accessible at this stage. And the reason that we're doing that is $10,000 can make a big difference to working out whether you are or not going to pay tax at the end of the year. And it can make a big difference in terms of planning, big difference in terms of how you fill in your tax returns. So we're going down the, yes, it's going to be treated like any other grant and it's going to be accessible, and anything that it's spent on will be deductible. If it's a business expense, which it has to be under the guidelines of the grant. So that's why I've got yes, maybe there. Now, the next one is super that's accessed via the COVID concessions. If you've pulled down your $10,000 super and you're going to pull down another 10 next year, is that taxable to you when you pull that down? And the answer to that is no. So if you've accessed your super, then that lump sum is not taxable to you. There's some issues with companies and trusts in terms of getting this non-taxable money out. So once the money goes into a company or a trust, you've then got to get that money out to the owners. And if you want to do that and it's not actually taxed within the company or the trust, that can cause some problems. So by all means, get in touch with your advisors if you are looking at trying to get that money out, because the minute that you pay it out as a wage, then that's taxable to you individually, or a trust distribution taxable to you individually. So it can get quite complex, the issues in and around that. And I do want to keep today reasonably easy to understand. So if we do want to go into more complex matters, feel free to get in touch. Some end of year regular requirements. Nothing's changed on these, but it's worth reiterating. If you run a business whereby you have stock and you account for stock, then make sure that you do a stock take at 30th of June. For small businesses, there are concessions in and around stock that say if your stock movement is less than $5,000, you don't need to do a stock take. It's always amused me, that one, because how do you know that your stock hasn't moved within $5,000 if you haven't done a stock take? A stock take is also a good internal thing to be doing with your business. So if you are a business that has cost of goods sold, make sure you do a stock take in or around 30th of June. The other one to consider, which is very topical at the moment, is bad debts and the writing off of bad debts within your business. So if you do have customers that you run on account, review those prior to 30th of June. If it is possible, then write them off as a bad debt, so as you're not having to pay tax on that money that you're not going to receive. There are restrictions in terms of what you can write off as bad debts. You do have to have attempted to collect the money. You do have to be able to show that you have pretty much exhausted your efforts in terms of trying to get that before you write it off. You can't simply say, okay, I'm going to write all of these off this year and then bring them all back in on the 1st of July. It's kind of a bit of a no-no. If you've got more complex matters in regards to your tax prior to 30th of June, by all means, see your accountant. If you need a second opinion, then obviously we can help you out with that. So what's your plan when stimulus ends? 90% of business owners that we send what we call Prioritise, which is our online business questionnaire, highlights what businesses are struggling with and what they need assistance with. It's the start of our coaching process. Any new clients that we take on, we take through this Prioritise process. And 90% of the questionnaires that are filled in say that it's very, very important that you have a plan, but we don't have one. And if there's a big gap between what's important to you and how you're actually going, then that needs to be a focus to work on. So what we've found with COVID is we've found that a lot of the people who really don't have a plan are running around madly trying to work stuff out. Those who did have a plan, it's basically been wiped out and had to be redone. And people haven't really redone their plan, they've just reacted and they've had to react. But now that we're able to get our heads above water and take a bit of a deep breath, it's time to actually look at what your plan is for your business. Very important to understand that a lot of this stimulus started around this sort of March, April date and will end September, unless the government extends that help. And we're seeing now discussion that the government will only be extending that help either under new programs like Home Builder, or there's one that's expected to be for arts and entertainment. But extending it broadly for businesses that are now able to reopen, it's not going to be there. So if you're a cafe owner and you've been relying on JobKeeper and your $10,000 grant and a bit of cash boost to get you through, come September, you better be hoping that your plan is going to pan out, because if your revenue then is still significantly down and you haven't looked at your costing structure and you have no plans as to how to manage this, you don't have a financial plan, a cash flow plan in place, then all hell's going to break loose, and you pretty quickly, that money's going to dry up and you're going to be in all sorts. So planning at this time is critical. I use the line a lot, the one from Game of Thrones, winter is coming, well, spring is coming. And that's when all this is going to hit. Okay? So we do what we call business action plan. We take businesses through Prioritise, and then we talk about, we take businesses through a business planning process, which previously used to cost about $2,000-3,000. We can now do for around about $1,000, yeah, just under $1,000. Gives you 3 hours with a business coach and takes you through some key areas. So we go through SWOT analysis. Some of you might have seen the videos that I've been putting out in regards to that. We go through operations and finance in your business. And operations is just a fancy word for how your business is being done. Don't overcomplicate this. Sales and marketing in your business, people and procedures is a key part of any business action plan, and then your cash flow forecast. So those key areas come into what we call business action plan. We're also launching a thing called Revive, Survive and Thrive, which is going to be an online course. A lot of people have been asking us for that, particularly in the current environment. So we're working quite hard on getting the content up. So you'll see some stuff come out about that shortly. Back into detail. Am I going for time? About 10 minutes, okay, Glenda?
Yep.
10 more minutes?
Yep.
If that?
Yes.
Okay, tax time. Just wanted to reiterate some key points. One is legislation done. And there's this thing called Section 8.1 of the Income Tax Assessment Act. And it basically says if you want to claim something as a deduction, then it needs to be necessarily incurred in producing assessable income and not of a private, domestic or capital nature. So what does that mean? So it means that it needs to be something that's necessary to you earning your income. It can't be something that draws such a long bow to you earning your income that you're just not going to be believed. I had a guy who worked fly in, fly out in the mines, wanted to claim a pair of rubber thongs for showering whilst he was on the mine site. I got into a bit of trouble for saying no to this one. I said, no, it's just not necessarily incurred. You can't claim your $2 thongs from Kmart. To which another accountant said, oh, look, the poor bugger, just let him claim his thongs. It's $2. I said, yeah, but that's the principle of it. You're not the one who's got to sit opposite the taxman if the taxman says, look, why did you claim this guy's thongs? Or when he leaves and goes to another accountant and says, oh, my previous accountant used to claim my thongs. And they go, oh, that direction accounting, they must be really dodgy. So another example would be a guy who used to run a fishing tackle store, wanted to claim his home swimming pool for testing his fishing lures in. So the swimming pool in the backyard wasn't necessarily there to test his fishing lures in. It was there for other reasons. And that brings me to private domestic. So the swimming pool, he might have used it for testing his fishing lures in. And there may have been an argument to say, well, okay, 2% of the time that the swimming pool is there, it's used for business purposes as opposed to private. And this is where things like home office deductions it comes in there. You know, is your electricity there for business or is the electricity there for private? Is the internet there to watch Netflix or is the internet there to use for work purposes? So you've got to be very careful of apportionment when it comes to private or domestic. And what capital nature means is it a deductible expense or is it something that you need to depreciate? So if you buy, it's a bit hard now with all of the rules with instant asset write-offs for businesses being 150,000. There really isn't a lot that a small business buys that is going to be well over that in a regular sense. So capital and revenue really doesn't matter anymore, but it is a rule that's there. Now, the second point that I wanted to drive home was all tax returns are self-assessed. And I raised this before, until you're audited, you will be allowed the deduction. So if you want to claim that nice red Ferrari that you've got in the driveway, go ahead and do it. You'll get the deduction for the Ferrari until the tax office knocks on your door and doesn't allow it. Same with the guy with the swimming pool. He could have claimed that and he might have got away with it because they might never have knocked on his door. And he would have been telling all his mates down the pub how his accountant claims his swimming pool. So you kind of get the gist. You can do what you like until they knock on your door and ask you about it. So a few things I wanted to... Sorry?
Oh, sorry, that comes into capital gains tax though later on, so they're a bit stumped in that. pool situation?
Yeah, certainly. And that's a perfect lead in, Lynn, to my next point about home office deductions. Home office deductions you would think would be quite simple, but there's a rule about what you claim as home office deductions as opposed to a place of business from home. And that can cause some problems in terms of capital gains as well. So a lot of people go, oh, I claim my rates and a percentage of my interest on my mortgage and this, that, the other, which is great because you may be able to argue that your, the granny flat you've got out the back is a place of business, or the room that you have with the side access is a place of business. But if you start claiming things like interest and rates and so on, you can then start saying, well, okay, a section of my house is no longer principal place of residence. And that can cause a capital gains problem. A lot of people gloss over that. So it's much better to look at your home office deductions in terms of the running expenses as opposed to the capital expenses. So really good point on the swimming pool, which blended well into the home office deductions. So home office deductions, a few things here. You've always been able to claim a business percentage of your expenses. So things like internet, phone, heating costs, electricity. Yeah? But if you want to claim a business percentage, you have to be able to show how you've based that business percentage. And that's typically some form of a log of your hours, a log of your phone calls, a log of how you're basing your electricity claim. You then need to keep substantiation of your electricity, telephone, internet, all of those charges. A few years ago, Tax Office came out with a rule to say, well, okay, we know that electricity and things like that are really hard to be able to work out a log and things like that. So we're going to allow you to claim a cents per hour method, and that cents per hour method can be applied at 52 cents on that, and then you can claim your actual costs for things like internet and so on. So it was a bit of a hybrid system. With COVID, they've brought in a shortcut method, and they've said, okay, you can use a log claim of everything. That's first option. Second option is the hybrid, 52 cents plus actual costs and a percentage on things like internet. Or you can just wipe the whole lot and claim 80 cents per hour. So if you just want to wipe all of that and forget about the substantiation, forget about keeping a log, you can claim 80 cents an hour, but you're only allowed to do it from the 1st of March through to the 30th of June. So they haven't given it to you for the whole year. So if you want to claim prior to the 30th of March, you've got to do it under one of the other two methods. But from the 1st of March to the 30th of June, if you've been working 8 hours a day from home, 5 days a week, then you can claim 40 hours a week at 80 cents. It's not a lot, but it's a claim that they're allowing you to make. So look at that one come tax time, your home office deduction. Training and marketing. So if you've been doing additional training during this year, whether you've had to retrain in certain things, whether you've been doing additional courses while you've been in isolation, look at the relevance of those again. Are they necessarily incurred in producing assessable income? If you run a business that is a digital marketing business, but you've done a training course in how to groom dogs, then it's really not incurred in terms of your business. Yeah. Additional marketing costs. So a lot of people have moved to doing more online. So certainly look at the additional costs there. Technology and equipment. How many people have gone out and bought an additional desk? How many people have gone out and bought maybe a laptop, an adapter to take you from one screen to two screens? There's a whole raft of things that people have bought technology-wise. Do be careful about the big screen TV that you bought. Again, is it necessarily incurred in producing assessable income, and is it of a private nature? So just be careful that you're covering yourself in all of those areas. The guy down the pub, oh yeah, my accountant told me to go down and buy a 75-inch TV from JB Hi-Fi and claim it. Well, that's great, but has he applied all of these things? Maximising your super. Depending on where you're at, most people have a cap of 25,000. Make sure if you have the cash that you maximise your benefits there. speak to your advisor. But ensure that you pay super in June early, because if you pay it after around about the 25th, it won't go into the fund. So if you're going to use super as a bit of a tax deduction, then you need to get onto that now. You can prepay things. You can prepay your rent if you've got a premises. You can prepay interest on some loans. You can also prepay your accountant if you want to. I've got some clients that do that every year, and they get a rolling sort of deduction on that. You can also pay a business coach as well. So there's something to think about. You can also delay income. So from a capital gains perspective, a capital gain comes when you contract the sale. So if you're looking at selling a property at the moment and you don't want to, and it's got a capital gain on there, or shares, for instance, probably not shares at the moment, but unless they're afterpay shares, you would want to look at when you're going to contract that sale in terms of tax. Income, we've always had this concept of delay your income. If you can, put it in the next year and deal with next year's tax next year. Okay, so at June, we're always saying to people, don't earn too much money in June, because you've had a good year, right? But you've got to watch COVID, because the COVID restrictions are saying don't manipulate your income to be able to access additional eligibility. So you've got to be careful that you're not doing things in COVID. For all those people who are already eligible, it's probably not going to matter. But for people who are trying to argue eligibility in the June quarter, then it will, because if you're deferring income to July, you're fudging the system and the ATO will be on to you like a shot. So be careful with delaying income this financial year. Some other changes just quickly. For superannuation, there's brought forward caps. And what that means is this is the first year where if you had a cap of 25,000 super last year and you only contributed 5, then you're allowed to bring forward a chunk of that cap to this year. So instead of just having a cap of 25, you can have an increased cap. So if you've got the cash available for superannuation is a great tool. And if you are in the situation where you haven't used your cap last year, but all of a sudden, a bird just ran into my window. Geez, that put me off. If you have some excess cap, then you can use it this year. So if Auntie Ethel has left you a chunk of money in her will, you might want to look at using super to maybe bring your income down if you need to. Instant asset write-off up to 150,000. If you're needing to buy equipment, you'll get an immediate deduction there. Any of those businesses in the call or outside of the call that are in a company tax rate will change 1st of July from 27.5% to 26%. So if income's in next year, it's going to get taxed less than what it is this year. And also if you are declaring dividends, now might be the time to declare them, because they'll have a higher franking credit than they will once the tax rate goes to 26%. So there are a few things that are a little bit more complex. If they do apply, feel free to get in touch. What you need to be doing now, I've probably gone over time, but you need to be looking at good tax planning, and it needs to start now, and then from 1st of July. So good tax planning always starts at the start of a tax year. Get yourself something like Receipt Bank or HubDoc. If you don't know what they are, give me a call. They really help you in making sure that you capture everything that will be deductible for you over the course of the year. If you did vary your pay-as-you-go instalment in March and then get a refund for September, December, be careful. There's going to be a double dip in about 12 months' time of tax that you'll need to apportion cash for. Make sure you review any subscription software that you've got and make sure that you're actually using it. If you're not using it, get rid of it, because cash flow is going towards all these subscription things that we thought were a good idea and we've forgotten that we're paying for them. So review your subscriptions, review your cloud accounting system if you do have one. Is it working effectively? If it's not, get some good advice in terms of getting it working effectively. If you don't have a cloud accounting system, put your hand up and talk to somebody who can help you get into one. and invest in your business skills and planning, which is what you're doing now. Okay, but planning in the business is a really critical one. There's some contact details for me. Happy to provide those to the group so you can get in touch. Q&A, Glenda, did you want to move on to the other content, or did you want to do Q&A now? Because I have gone a bit over time. I'm sorry about that.
Yeah, let's just check with our participants, David. You've given us a really comprehensive more than an overview with some things, but there were a couple of questions along the way which I think got answered in what you said. But can we, David, if you can just unshare, does anybody have a question relating to what David's been talking about that they'd like to raise? Lynn?
Just with the proposed job seeker changes that may come into the future, no one knows what they're going to be. Is there a chance that they'll go back and say, oh, well, no, you can't get those payments anymore. You owe us a lot of money now? Like,
oh, look, if it was 5 years ago, I'd have probably said there wasn't a hope in hell of doing that. But we have seen the government put things in retrospectively in terms of legislation since. I don't think it'll happen with JobKeeper, though. I think JobKeeper's too far and wide. And I think it'd be political suicide for the government to say, we gave you a set of rules, you abided by the rules, and now we're going to want it back. I think anything will be prospective. That's my view.
Okay. Anyone else? Oh, no. Well, obviously we're full of information. We're going to go away and make sure we do all those things. So thank you, David, for all that info. And Liz is clapping there for you. So thank you.
Awesome. Always good to get the applause. Thanks, guys.
Okay. So if we move on, we've got three other subjects that we flagged for talking about today. So maybe we'll just spend 5 minutes on each and then do a wrap up and any other questions. First was about cash flow. And I guess one of the startup questions that I might throw in is, how much do you need to run a healthy business? So maybe I'll just throw to David to start with, and then anybody who's got some thoughts can please join in.
So the question, just to clarify, Glenda, was how much cash flow do we need to run a healthy business?
Yeah, and then how do you build it up so you've got that?
Okay, so first of all, we need to work out how much we need, and that comes into cash flow forecasting from my world. It's much like break-even analysis for a business. Is how much do you need in sales to break even, and then how much do you need to achieve a certain profit or return in your business? So if you haven't sat down and worked out those figures, it's kind of a bit flying blind. So a simple cash flow forecast is just like a budget. It's saying, okay, what are all my outgoings, and therefore what do I need in incomings to handle the outgoings and then some. Once we actually pull it apart, though, as advisors, we actually map it out on a monthly basis and put timing in there, because obviously there's cyclical nature of your income. You may get paid by your customers cash on delivery, but then you might get paid on account. So you've got to allow the timing for that. And expenses, you may have things that you pay monthly, and then you may have things that you pay in lump sums. So, for instance, I've just had an email come through for my annual registration for Institute of Chartered Accountants. So there's $1,500 that just all of a sudden it comes out of cash flow in June. Now, you need to plan for those things, not only as a lump sum for the year, that's a good start, but then start to look at it on a monthly basis and how that affects your bank account, because then you'll see the holes, and then you can say, well, okay, I've got to plug February because there's a whole heap of outgoings and people are normally a little bit asleep after Christmas. So I need to plug February with income. Therefore, I maybe need to do marketing back in November to make sure that I've got things in my pipeline for February. So it's really good for capacity planning as well. So in terms of answering how much cash should I have, I think everybody's different, but the way to work it out is, first of all, sit down and rattle off your outgoings and work backwards.
Anybody have any comments or thoughts or questions around that, around cash flow? Who does a cash flow budget? Can I put you on the stuff, or a cash flow forecast?
Interestingly, that's something I've just started doing.
Yeah.
I used to just sort of hope and pray, basically. And with what's happening, because obviously with COVID, as you know, I do markets, my income has changed dramatically. So that has really forced me to look carefully at my cash flow, and it's really opened my eyes to, so that I suppose you could say COVID has actually had a silver lining, because going forwards, I'll be a lot more in control with my spending and thinking about my spending, rather than just going, yeah, that's fine. I've now got to, and that's good. That's good.
And probably more in control of your marketing, because you can see where you're going to need extra cash in the year, and therefore, as David said, start marketing a bit earlier to try and cover that.
Yeah, that it's a little trickier for me, given the nature of my business, but until now, I had a clear idea. I mean, David's absolutely right. My business is cyclical in nature. You know, we're coming into winter. People don't tend to come to markets in the winter. Luckily for me, people are in pain all year round. So if they don't come to the markets, they ring me. But there's still a difference.
Yeah.
And particularly school holidays would normally have been a good time for me. It'll be interesting to see what happens going forwards. But yeah, it's been a good wake-up call, and David's right. It's something I should have done a long time ago.
Good. Okay. One convert to
one of the things that I do it for is a huge bill. So I get a huge bill around November, which is never good because it's just before Christmas. So my registration bill of $1,000 comes at that time. So I do save throughout the year to pay that bill. And the other one, is Rego. Rego always hits at a bad time. And I've just learned to put, $20 aside, whenever I can to go towards Rego, $20 when I can to go towards registration. And that's been useful. And to ring up people, whether you can pay it, monthly rather than one big hit.
Yeah, good thinking. It's little bits that get you there in the end.
Yeah.
Karen, were you wanting to say something?
I have a question. I'm planning, I was going to do my tea towels, and I'm still planning because I'm not doing the markets anymore. I'm trying to get an online business and put my tea towels of the Northern Beaches photos and Port Macquarie to the shops now. And I'm thinking of going ahead in September because it's spring and doing a whole market ad campaign and all that. Do you see that the economy wouldn't be improving in spring? Because everybody, even I rent a room, and she goes, because I was doing Vivid and I haven't got any orders, but I'm just promoting my Vivid on Facebook, and she got, one of the comments says, "Oh, nobody has any money now," and I'm thinking, uh-oh, should I go ahead and do it? I don't know now.
I think, Karen, you have to do a little bit of market research. I don't think people don't have money. They want to spend money in the right place and for the right things. So an example, Lee is here in this call, right? She sells things that most people didn't think of buying, which is the blue powder and so on. But the way we have marketed it is, you're in isolation, you spend time with the family, we have all these family recipes you can try, and we do, and we actually invested more. We had a TV commercial running and so on.
Oh, okay.
It was sold out. So you really have to do some research and position your message. Why would they need your products at this time?
Well, I was going to market, like, you can't go overseas at the moment, but you can send a nice tea towel.
Yeah. So
I might, you know what? I might even not even have a photography business. I don't know, because
sounds like you're in a position of really needing to analyze where it is you are and where it is that you said you want to go, and start to go back to tours and do a total analysis. But
Glenda?
and there's I noticed Liz has just put up, on the other hand, not necessarily in Karen's area, but not everybody is struggling during COVID. A lot of us are, and there are people out there who are doing quite well, and therefore still have cash flow, or private cash flow, and can still buy things. So Barb, you had a comment?
Yeah, that's true. And also, Karen, some people, because of the job keeper, some of them actually earn more than what they did before. So there is money around. David, you talked earlier about being the optimistic side of the recession that may happen. It's going to happen at the end of June anyway. I have the fortunate experience of being a little bit older than some of the rest of you. So I've been through the recession in the 90s and had a business and had 9 staff. So just reflecting back on that time for the people who were too young to experience it, or who were at school then, lucky you. So they say have 3 months of money into the future. Well, very few of us can have that. If we can access your mortgage, if you're so desperate you can access your mortgage, I'd rather people would do that than if they access their super, because super is designed for compounding, and I call that the most beautiful mathematical equation ever. And the idea is for us to have it later in life, and that's what we want. We don't want to be going into our later years not having that extra money. I remember some very tough times when Laurie and I were working. We had a management business, and we would go out to see those clients, and overnight those clients with the beautiful marble floors and the glass rooms and everything was gorgeous, they had a chain and a lock on their doors, and we were about to do some business with them. So, and that happened quite a bit. Sometimes I was asked to go and help mentor some of my, particularly the male clients, help them empty their offices with their cardboard boxes and remove themselves from their business. Very hard for them to come home and tell their wife and kids, I've got to pull you out of private school, we're not having sport, and mum's got to go and get a job. And often the jobs were available to women, not men. And it was a pretty tough time for those men too, so they just needed a bit of psychological support. What I do and still do now is make sure we get paid for each job. So with my bigger clients now, like, I don't give any credit. If it's a large client, they will pay me in roving trainer before the work begins. And particularly the larger ones, I'll always say to them, and even in an email, I'll know that if this training doesn't go ahead, I will pay you back. But getting the money later, particularly if it's through an insurance company. Sometimes I do rehab work for insurance firms, and they take 3 months to pay. And I'm not going to wait 3 months for my money. Each person who's putting that through, they get paid each week a salary. So they virtually understand that. And I thought that would stop my money from happening. But once I was firm, I hear the agent or whatever saying, oh no, she needs to get paid before she does the work. So being tough enough and brave enough to say that's what I want. And all other training, I get paid on the day, and I have Square, and I take their credit card, I process it, and it's done and dusted. So I don't spend and waste a lot of time having to either chase a debt or send an invoice or whatever. I can send a paid invoice nice and neat that it's done after the fact. I always say then in the recession, it was very tough. A lot of people going through that same thing. So keep positive and in touch with each other. And your energy and vibration is hugely important when going through that. It was very hard. And when we talked about going into COVID, you know, it was a tough thing because if we had, say you lost a position or a job or a business, you could always say, it's all right, I'll go and get cleaning, or I'll go and become a barista, or I'll get some money in the door somehow. But everybody was in the same position, so we couldn't do stuff. We just had to, you know, cope. And thank God, you know, we had the JobKeeper. Interestingly enough, I had a random phone call from Pat Connigan yesterday, yeah, our federal member, which was just out of the blue, just checking in and seeing how you're going. Fantastic. I said, can you pass on to ScoMo, Mr. Morrison? They're very glad for JobKeeper. And he said it may extend or it may not, and they're going to assess that as time goes on. So we're very grateful that we've got that. That wasn't available in the recession in the 90s. And so a lot of businesses did go bust, and it took a long time to build up. Some of the ones, some people said, well, only the resilient will survive. So if you're a little bit on the edge, you didn't make it, you know, and people weren't able to pay the money. So you might have had big businesses and they owed you huge debts and they didn't come forward. They didn't even pay their staff. They didn't even pay their super. They just went out of business. So my advice, if anybody was asking, was make sure you just keep on top of your cash flow, like David was talking about, so that you've got that happening all the time, and then just keep in touch with other people and ask advice. You know, like I've had people ask me, would you make phone call on my behalf to get this invoice paid? You know, if I'm doing consulting for someone else. So if I ring up and say I'm in the accounting department and I'm just looking for that invoice, that's easier because it's distancing me from that person, where they feel, oh, you know, there was a bit of a mate, you know, and he owes me $1,000 or 10 or whatever. Well, if you're ringing up on behalf of somebody else, they tend to take it a bit more seriously. So that's just a few ideas. So handing back to Glenda and David.
No, and good ideas, Barb, and lots of different things to get us thinking about how can we make this work for us instead of always thinking it's against us. The thing I really wanted to spend some time on today was the next one, is about paying yourself. You know, what comes first, paying your bills or paying yourself? And where that leads us, etc. And it's all sorts of questions like, you know, how much are you worth, and how do I set my pricing, which I know is a really big topic. But I guess I just wanted to talk about and see what people thought about, you know, when you know, how do you make sure, do you pay yourself first before you pay your bills? And if so, how do you make sure you've got the money to do that? Nobody's.
I'm a proprietary limited company, so I pay myself and employees all the time. But for myself and all, I pay a lower, not much, to sort of keep the things going, normal thing. But then we can say, okay, well, how did that go over the last 3 months? We can take a drawings or something like that to top up our income. So we sort of manage it that way. And then if we don't, well, you know, we don't have a big lifestyle. We're minimalists in nature anyway. So we run on an oily rag generally, and then see down the track if we can pay ourselves drawings. So that's good. But as a sole trader or partnership, that's sort of, I don't know whether that works for that, but
Right. Yeah.
You know.
Well, for me, I always pay my vendors and staff first. That's my priority. And then, of course, I do have like a small salary, and then the rest would be what I call bonus.
So it's a
I
bit
always
like
take care of
being,
my staff and vendors first.
yeah, and then look to see if there's something left that you can pay yourself something extra from.
Extra, yeah.
Yeah, the bonus. Yeah. David, do you have any thoughts around this topic? I'm sure you do.
I'm a big big proponent of I can be a bit ruthless at times. So my coaching bio says that I'm a cross between Gordon Ramsay and Mother Teresa. A business need, in my view, needs to be profitable, and it needs to be profitable over and above the return for effort for its owners. So the point where we start, and I mentioned it before, is break even. So first of all, looking at what point is your business actually going to break even. And once you know how to apply break even analysis, you can then look at, well, okay, what does this need to look like in a sales concept to generate X amount of profit? And then what does it need to look like in a sales sense to generate not only X amount of profit, but also X amount of return for me as a business owner? And it's a fundamental business concept, but it's one that we find probably 70 to 80% of businesses don't apply. They just get in, get their hands dirty, start earning the money, managed by the bank account, and that's cash flow, yeah? So break even is critical, and all break even basically is applying, it talks about contribution margin at the technical sense, but your gross margin, if you can work out your gross margin on your product, for some of you, if you're in a service thing, then your gross margin's really your only expense is your time. So your gross margin might be 100%. If you're selling a product, then you've got to look at the cost of that product and what your gross profit is. And your sales less your gross profit leaves you the money to pay everything else in your business. All the other bits and pieces, the A's to Z's that are on your profit and loss. So if you work out how many, let's say you've got a product that you sell for $100 and it costs you $40 to buy that product, then you've got $60 in every $100 sold to apply against all the A to Z's. It's a very simple concept, but one which most businesses ignore. So the question is if you want to, if you've got $60 against all of those expenses, then what you basically do is you take all your other A to Z's and you divide them by that 60% figure. And that works out what your turnover needs to be to break even. And once you know what you need to break even, what you can do is to all those A to Z's, if you want to make an extra $10,000 on top of break even, we just add $10,000 to the A's to Z's. And you say, what do I need to make my expenses plus 10,000? And then you divide that by your gross margin. And that tells you the sales that you need. If you then want to earn $30,000 for yourself on top of your profit, on top of your expenses, you add that to the figure and you divide that by 60. And what you end up with is you end up with a sales figure, which is basically your sales budget. And then your sales budget, then I call it chunking. And we do this a lot with our coaching clients, is we then, $150,000 sales doesn't mean a lot. Okay, I need to make $150,000 sales. Okay, I'm going to go out and I'm going to try and generate $150,000. I'm going to work my backside off. That's great, but how are you going to make the $150,000? What does that look like? Well, if it's if you're selling books, then how many books does 150,000 represent? How many books do you need to sell each month to do that? If you're in a service industry, if you're a massage therapist, how many massages is $150,000? And how many massages do I need to do a month? How many a week? How many a day? How does that look like in terms of appointments? How does that look like in terms of my capacity? Because as an individual, I just might not be able to do that many massages. So that then means maybe I've got to look at my capacity. So everything comes off this analysis of expenses, margin, bring it back to sales, and then work by chunking it down into specifics. That can set you then a monthly budget. And in that might be your cash flow and then accountability to start to keep you to account on a monthly basis as to how you're going about your business. But most businesses are just, okay, I've got a product, I want to make as much as I possibly can. I'm going to run as hard as I can. I've got some great ideas, but there's no then business analysis behind it. And I think that analysis of break even is critical if you want to look at getting a return for yourself. Because most of us, and it's no shame, because that's how most businesses run, are saying, correct me if I'm wrong, are saying, well, okay, I take care of all the expenses first, and then if there's anything left over, I'll draw something. And that's kind of a wrong way to look at it. We've got to look at our businesses in terms of viability, and we've got to say, this is what I want from all the effort that I put in. And if you can't earn that, then maybe you need to, this is where I'm talking about being ruthless. If you can't possibly do that, then maybe you need to reconsider whether you should be in business or not.
One of those.
And that's very hard at the smaller level, because we're in building phase, or maybe it's a second income, or so again, you just need to determine what it is that you want out of the business. It may be that you're just doing it for a bit of a side hustle. Yeah. So determining those things, I think, is critical.
Yeah.
Big or small.
Yeah. Karen, you had a question?
I have to go pretty soon. Thank you very much, David. But I don't pay myself now, but I'm going to pay myself on July 1st, the start of the new financial year. How much do I think, should I just pay myself $100? Or how do you, I know you went through all this, how do you get a figure?
Okay. Well, for me, the way that I analyse it is, again, I look at break even for the business.
Oh, okay.
Okay, what I flip it on its head and I say, well, okay, what is it that you do want to draw out of the business? Okay, David, I want to draw $200. Okay, let's look at the figures of the business. Let's look at what you're turning over at the moment. Let's look at what your costs are, and let's do a break even analysis, and then add your $200 a week into that break even analysis. Okay. And then work out what sales you have to actually do to be able to afford that. Because you can turn around, you can pay yourself $500 a week if you want to, but it's only a matter of time until the money runs out.
Yeah.
So there's no real hard and fast, pay yourself 100, pay yourself 200. It's more analyze your figures, determine what you should be drawing for your efforts, and what does the business need to look like to get you to that point. And then what we do is we say, well, okay, we're not there. So now let's step it back a notch and maybe draw 100 for a while until such time as we can get it to the next step. What does it need to look like at 100? What does it need to look like at 200, 500, etc.?
And
that's the way I
have a quick question about stock taking.
Yep.
I've done my stock taking and now I'm not going to do the markets anymore. Would I write that off? Because I'm going to sell it maybe, I don't know when.
No. So your stock, if you've paid for your stock and you haven't sold it yet, then that stays. It just stays static until such time as you sell it.
Right.
Depending on your business, I'm not intimately familiar with your business, so that's kind of a generalised comment. But if you're in a business, let's say I sell mobile phones at the markets, it doesn't show up that way. And I have 3 boxes of these, and then all of a sudden the markets stop. They're still stock, so it just sits on my accounts until such time as I then start selling them. If I go and throw them in the bin, then I write them off. If I sell them on Gumtree or Facebook Marketplace, then it's a sale and it comes out of stock.
Okay.
But if you're just holding it, waiting to sell it, then it's still stock on hand.
Right, okay. But I have done a stock take.
Okay.
It's been very good. I have to go to work now.
Thanks, Karen.
Yeah, thank you very much. It's been very informative. Thank you. Have a nice day.
Thanks, Karen. It's one thing I'd like to just raise. Veronica, when we were talking the other day, you were saying that you use something that's a bit like Afterpay for Business, which was...
Yes, there is an installment scheme for services. I can't remember the name right now. I have to check.
Is it Moola, Veronica?
Sorry?
We use a thing called Moola, Moula.
No, there's another one. So what happens is the client actually pays this company by installments, but that company pays us the lump sum.
At the beginning, the company pays you the lump sum?
Yes. So the client has to apply. It's like financing, but afterpay where you pay for a dress, for example, by installments. So it's the same thing.
Right. Okay. So there's means about getting your money up front where the client can pay it off through another party.
Yes, by installments.
Okay. Yeah, I wasn't aware of that.
We use a similar product. It's called Moola. And it's very similar to if you go and buy, best way I can describe it is if you go and buy a big screen TV from Harvey Norman, you might get 6 months interest free. And then after the 6 months is up, there's a reasonably high sort of interest rate. It's not for everybody, but what it means is as the business owner, somebody might want to enter into a coaching contract with me and pay it off. So rather than them paying me off, as Veronica said, you get as the business owner the lump sum, less obviously a merchant fee commission to Moola. The business at the moment, Moola offer 3 months interest free, so I can offer 3 months interest free on my services, and then they get 9 months to pay the balance. So it's effectively over 12 months. Interest rate ends up around about 25% annualised, which is about the same as if you go and buy a fridge from Harvey Norman and don't pay it off within the interest free period. You end up in exactly the same position. So that's what we use for people who want to do that, or we just put them on direct debit.
Yeah, it was a tool that I wasn't familiar with till Veronica mentioned it the other day. Okay, well, we're right on 10:30. Any more questions from anybody or comments people would like to raise, ideas they've had, successes?
I just have one more question, David. Just now you mentioned that the past time or something like that on one of your slides on JobKeeper, that if you apply in April, it means that you already passed the test or something, and you kind of qualify in the other coming months.
Yeah, so basically for JobKeeper, if you had to choose which month you were using as your test month, okay, when you first enrolled. So if you chose April as your test month and you qualified in April, then you qualify for JobKeeper. So you don't have to re-qualify in May, re-qualify in June, etc. Once you're qualified, you're qualified.
Okay, so but if June, now that let's say we are open and the businesses come back in and the sales increases, do you still qualify then?
Yeah. So you only have to qualify once. So once you qualified in, let's say, April, your business could go through the roof in June and your income could triple what it used to be, but you're still eligible for JobKeeper. Okay. So you still need to lodge your monthly declaration and tell the government what your actual and what your forecast is, but supposedly that's just for informational purposes. But I believe that this 23rd of July date that they're going to use to review it, I believe that my view is that they're going to say, okay, you might have qualified in April and the rules were that once you qualified, you were eligible, but now we're going to change the rules slightly and tweak it, because if your business is now back on deck and doing quite well within some sort of parameters, then you're not going to be eligible anymore. So based on the current rules, once you qualify, you're qualified for the whole period.
But from July onwards, they'll take that changes on. So July onwards.
Yeah. So presumably when they sit down in July, they'll say, okay, when you do your declaration for July in August. It'll be interesting to see when they make it, because some businesses will have already assumed that they could pay staff and top them up. So I would expect it maybe August, September to be the affected months. So the last 2 months of what's current JobKeeper. But up until then, it's free reign.
Yeah, just on that, David, when I was speaking to Pat yesterday, and you mentioned it a little bit earlier when we said, oh, well, we don't want to be greedy. The same conversation a little bit with Pat Connigan, our federal member. He said the government really want us, what we're getting in the JobKeeper, to put it back into the economy. That's what the government want us to be doing. They want us to be spending some of that money and spreading it around town so it starts everything churning over.
Yeah.
And even though some of us might go, oh gosh, it's generous, or I'm now getting, you know, am I getting too much? You know, like, I don't know why we think like that, but anyway, that's what business owners are like. And so we don't want to be greedy, but he was saying the federal government want us to be spending the money in our economy, especially local areas, and getting it moving around, whether it's at the coffee shop or the petrol station or whatever, so that is moving around, and then they will then be spending the money with the rest of us and so forth.
I think there's two things. Sorry, I think there's two things, like with that mentality in like you work for yourself, you're not a dole bludger, all that sort of stuff. Like these handouts, no, I'm not going to be, you know, that. Whereas what David was saying before about the you know, I'll try and make the best of my tax. How can I squeeze this out of that? Because that's what's owing to me, sort of thing. And then there's these handouts. I don't want to be seen as, you know. That,
yeah, yes, we feel like that. Jody, you had your hand up? Jody, you were going to ask a question before? We can't hear you. Jody, can't hear you. Jody, we can't hear you.
I'll message her.
We can't hear you.
Can you not unmute her, Glenda?
She's not
muted.
Might be her earphones. Nice co-worker you have in the background.
Oh, she was just commenting about the book Profit First.
Was it? Oh, okay.
Yeah.
All right. While Jodie's getting sorted, any other questions, comments?
Just a big thank you to David and Glenda for facilitating, David for opening up his brain and knowledge to all of us over those many years, and just wish everyone a great Friday and keep doing your business. We love it.
Yeah, and a couple of things I'm pleased to let you know that David's going to join Micro Business Forum. So he'll be around maybe a little bit more often, might even get to some of our sessions, which would be really, really good.
Coffee by the sounds of it.
Yeah, yeah. One of the things we do as a group, once a month on the second Thursday of the month, we have what we call Coffee Connect, where we book somewhere for a coffee, and we're actually going to be able to do it this week or next week. Next Thursday, 10 a.m. at Sheathers at Warhoe. I'm hosted by Lynn and Wendy. But you do need to book because we are limited to 10. So if you want to come, the registrations are out. You can go online and book, and so we'll see you there, which will be really, really good.
out in the back room so I can make a bit of noise.
Yeah, which will be good.
And move around.
Limited to 10?
Sorry?
Is it only limited to 10?
Per booking, so we can probably have 2 tables if it works.
Oh, okay.
Okay, right.
Maybe. That's what I'm thinking, because that could be set up as another booking.
Yeah, all right. And the other thing is to remind or let everybody who's not a member know that at the moment we have a 3-month free membership or deferred membership, if you like. If you want to join you can join Micro Business Forum, and we won't bill you for 3 months. So just to so you can try us and have a go. And I think that's it from us. So thank you again to David, as Barb said, and have a go forth and do a cash flow, everybody.
Very good. Right, weekend homework.
Yeah. Okay. Bye.
Bye.